So with the new year approaching, I'm hoping there's going to be tons of new investors out there. New year, new me. This is going to be the year I get my finances in order. And to be honest, there's no better way to do that than through index funds. And there's no better company, in my opinion, than to do that with Vanguard. So in this video, I'm going to break down exactly what an ETF is, why it's great for beginners and veterans as well, and some of the most popular Vanguard index funds and ETFs. So an index fund is a type of mutual fund, and this is often a misconception. An index fund is a mutual fund. There are two types of mutual funds. There's the actively managed ones, and there are passively managed mutual funds as well. And these index funds are passively managed mutual funds. And I'm going to talk about some of the pros that these passively managed funds have over actively managed funds. Now, the reason they're called index funds is because they track a specific index. For example, the S&P 500. What happens is investors pool a bunch of different stocks together to mimic what the S&P 500 would do, or what a bond market would do, or what small cap markets would do, international markets. They would take these indexes, and instead of having just a broad index, they would take a bunch of stocks, put it in there, and it would track that particular benchmark. So before 1976, actively managed funds were your only route. And then John Bogle, the founder of Vanguard, created the first publicly traded index fund. And guys, I have two great books here. This is the Boglehead's Guide to Investing, and then this one from the legendary J.L. Collins, A Simple Path to Wealth. These two books, they just changed my whole outlook on index fund investing and in Vanguard as well. I'll leave links to these if you're a reader and you want to get your hands on them. I highly recommend it, but a lot of the things I'm going to be talking about are really a deep dive inside these books. Now, long before the days of Robinhood apps and investing apps and zero commission trading stocks could be even more intimidating than it is today. And I think what John Bogle really wanted to do was he wanted to give an opportunity for the average American to be able to invest in the stock market without worry, without fear, and without paying the large fees associated with actively managed funds. That was his main goal when he created the index fund. He said, hey, let's take a broad index, let's take advantage of the rise and the fall of the markets, and the stock market will generally trend to go upwards, and let's do that at a very, very low fee, and let's allow everybody, not just the veteran investors or the stock gurus, let's let anybody invest inside the stock market. And I think when they first began, that we weren't sure if they were going to outbeat actively managed funds. But if you do some data and you do some deep diving, and the last I saw, between 2002 and 2017, 18, only 11% of actively managed funds reached or beat their benchmark for their particular sector. And that's kind of crazy, and I know a lot of people argue against that, and that's fine. There's many people out there that can beat an index, but to beat it year after year after year, that's where the real challenges come in, and that's where the benefits of index fund investing come in, because we are going to be long-term investors. We are going to be holding our investments for a very, very long time, and it's that very, very long time where these passively managed index funds are going to beat their benchmarks well beyond what an actively managed fund can do, because actively managed funds, they're very trendy, and yeah, they can have a great year, but then they're going to have a bad year, and it's like that longevity that we're talking about. And the last huge pro to index funds is they automatically gave you diversification in the market. Take, for example, VTSAX, the total stock market index fund, which I'll speak about in 1 second. It has over 3,500 different stocks inside of it. So when you buy VTSAX, you're essentially buying a small percentage of every single company in the stock market. If you follow an S&P 500 index fund, you're essentially buying a small percentage of every single stock inside the S&P 500. So although you only own one quote investment, one fund, you have that diversification across the entire index. So now let's talk about costs and fees, as well as how to invest and some popular Vanguard index funds. Vanguard has really gone from what they used to call their investor shares into their Admiral shares. And these shares will have a minimum of $3,000 all the way up to $100,000 with an average expense ratio of 0.11%, or $11 for every $10,000 you invest. Now, for some people, that might turn you off immediately, like $3,000 is a minimum to invest. I'll talk about ways to avoid that in just 1 second. And you can invest in these funds in pretty much any type of investment account. Your 401k, 403b, 457, your IRAs, traditional and Roth, as well as your taxable brokerage accounts as well. Now, to avoid these minimum fees, what you could do is you can invest in something called an ETF, an exchange traded fund. And most of the index funds that I'm going to talk about in 1 second have an associated or identical ETF. The major difference is an ETF trades like a stock. It has a live price, unlike an index fund where the price is set at the end of the trading day. An ETF you can buy for just the minimum of whatever that one share were to cost. And that could be a couple $100 and not even close to the $3,000 you need to get in something like a VTSAX, which has a $3,000 minimum. So if you're worried about the minimums, look at something called the ETF. So the first one is Vanguard's S&P 500 index fund. It has a ticker symbol of VFIAX. It has a $3,000 minimum and it has an expense ratio of 0.04% or $4 for every $10,000 invested. And this is going to track the benchmark of the United States S&P 500, which accounts for about 75% of the total stock market value. And if you're looking for the ETF for that one, that is just VOO, ticker symbol VOO. You could type that into your taxable brokerage account and you will find that S&P 500 index. Now, if you want to go a little bit broader than that, you can go with my favorite, VTSAX, which is the Vanguard Total Stock Market Index Fund. And essentially what it does is it just goes a little bit more outside the S&P 500. It gets some of those small cap or smaller companies involved. It has the same minimum of $3,000 and expense ratio of also 0.04%. And guys, I know that there are other total stock market indexes and other companies that have no fees. Remember, you get what you pay for. You have to look at the returns. You have to look at the type of company. Like I said, I'm not really worried about $4 on 10,000 as opposed to $0 on 10,000 if I'm getting something great like a company like Vanguard. VTSAX has an ETF symbol of VTI. Now, if you're looking to be a little bit more on the safer side, a little less volatility, maybe you're getting a little bit older, you might want to have something like Vanguard's Total Bond Market Index Fund. It has an expense ratio of 0.05%, a minimum investment of $3,000, and it invests in U.S. investment grade bonds, about 30% of those being corporate bonds and 70% of those being U.S. governmental bonds. Now, a question I get all the time about, the total stock market fund and the bond fund is, how much should I have in each? And guys, that's really up to you. At my age, I don't have anything in bonds right now. But if you weren't sure, there is something called the Vanguard Balanced Index Fund. It's VBIAX. It does not have an ETF, but what it does is it is pretty much a blend of stocks and bonds. Right now, it has about 60% inside stocks and 40% inside bonds. And guys, in my opinion, that is a very, very conservative approach to investing. But hey, that might be what you want to do right now. Remember, nothing you do today is set in stone. You could always start investing, and that's allowed to change and adopt over time. So maybe you want to start with bonds now and then realize you can deal with a little bit more volatility, a little bit more risk, and then you want to steer away from them. Remember, I used to think that everything was set in stone. Whatever investment I made today, I had to keep for the rest of my life. That is not the case. Another popular one is the Vanguard Growth Index Fund, this VIGAX. And essentially what it does is it tracks companies that are more likely to grow more quickly. Right now, that's pretty much the technology sector. It has an expense ratio of 0.05% and it has an investment minimum of $3,000. If you're looking for the ETF for this one, that's going to be VUG. The next one we'll look at is Vanguard Small Cap Index Fund, ticker symbol VSMAX. It has an ETF symbol of just VB, and pretty much it is what it says it is. These are smaller type companies that right now aren't the huge players, but they have the potential to grow just as well as the companies that are big. This can kind of be your way to, support the little guys. If you want a little bit of international exposure, you could look at Vanguard's Total International Stock Market, ticker symbol VTIAX. It has an ETF symbol of VXUS. Pretty much what this is going to do is it's going to track the indexes of international and emerging markets. Now this one and the next one that are associated with internationals, they have a little bit higher expense ratio of 0.11%. But like I said, guys, remember, this is $11 for every $10,000 invested yearly. So about $1 per month to hold these funds. And we talked about the United States bond market. There's also an international bond market as well. The Vanguard Total International Bond Index Fund, ticker symbol VTABX. It has an ETF symbol of BNDX. And essentially what this is going to do is it's going to track the performance of non-US investment grade bonds from international and emerging markets. It has an expense ratio of 0.11% and an investment minimum of $3,000. Guys, this video is helpful. Please give it a thumbs up for the YouTube algorithm so it pushes it out to other people that want to learn about index funds and Vanguard in general. Until I see you guys on the next one, stay positive, work really, really hard always. Please be kind to other people. Hope you have yourself an amazing day and an even better tomorrow.